Hey traders, Jason here from Leavitt Brothers. Happy Tuesday. Today I'm going to talk about one of my favorite trade setups. It's simple. It just uses the MACD and MACD histogram and the stochastic. It's a simple sequence that plays out often enough to give me a steady stream of trades on multiple time frames. All right, let's go through some examples and I'll walk you through it. All right, so here's TMF. Obviously, stock's doing very well, trending up. I like to find strong stocks in uptrends, and I like to look for entries when they pull back. Okay, so I was looking for an entry here. You can see somewhere in the 31.5 area. What I do here is I find a stock that I really like on a higher time frame, and then I zoom in on a lower time frame and I look for an entry. So this is what I found when I zoomed in. This is the 15-minute chart, and I'll walk you through the sequence that I like to play. Okay, so number one, we have a positive divergence with the price and MACD histogram. Then we have a cross right here. Okay, then price moves up, dips down one more time. Okay, and while that happens, the MACD histogram, it crossed, it came down and dipped, touched zero or close to it, and moved up. And at the same time, the stochastic cycled down and then crossed. Okay, so that's my entry. I call this a kiss and cross because you get a kiss right here and a cross right here. So this sequence, and then of course you can see the stock went from mid 31s to up to 33. So really nice day trade. This sequence is pretty much my favorite sequence. Okay, you get a divergence, then you get a cross, then you get a kiss and cross here. That sequence plays out at multiple time frames, and it's the one thing that it's the first thing I look for to see, to look for an entry, to look for a trade. Here is Nugget, the leveraged gold ETF. Okay, again, strong stock trending up. I wanted to get long on a pullback. Stock does not trade smoothly. Lots of chaotic movement. Doesn't matter. I wanted to get long. So what I see here is, and this is the 195-minute chart. Okay, so a day is 390 minutes, I believe. Yeah, 390 minutes. So it's basically it's a half a day. Okay, so what I have here is I have positive divergence, and then a cross. Okay, and then MACD histogram moved up, came down and kissed, and started going up again. So I was going to zoom into this area and look for an entry. So I zoom in with a 15-minute chart. Okay, I could zoom in with a 60. I can zoom in with a 30. I look at multiple time frames just to see what's going on. So I zoom in with the 15-minute chart. What I see here is I see a mini setup. I see a positive divergence. I have a cross right here. Okay, MACD moves up, kind of flat lines. Okay, so going into this next day, I was looking to get long. Okay, because we got a cross here, and this is kind of coming down to kiss. And what we got is we got a gap up. The stock moved sideways. This is a 15-minute chart, so this is almost an hour. Moved sideways and then moved up. So we went from like mid 36s up to like 41, up to 40 in one day. So that's a nice day trade. So again, the 195-minute chart gave me my bias. I wanted to get long somewhere in this area. I zoom in with the 15-minute chart. I get a positive divergence, a cross, I get a little bit of a kiss, and a cross with the stochastic. Boom, boom, boom. The sequence plays out perfectly, and then you can get long. In another video, I'll talk about how I play gaps, but not going to do that right now. All right, another chart. Here's Excel Energy. So we have stocks strong, trending up. We have some sort of consolidation pattern forming here. I like my initial entries to be within the pattern. I don't want to wait. I don't want to wait until the stock breaks out, because then you just have a lot more risk. I've just learned over the years that I'd rather start a position within the pattern and then add when it breaks out. And then if it's a failed breakout and it pulls back, I can at least, most of the time I could scratch it or even make a small profit because of my initial entry. All right, so here's strong stock trending up, trading in like a big rectangle pattern. I was looking to buy a dip. So let's zoom in and see what we got. So what we got here, that little dip that you saw that was coming down to the 50-day moving average was right here. Okay, so we had a lower low within the pattern. We had a positive divergence. Then we have a cross. Okay, MACD histogram goes down, comes down and kisses and starts moving up at the same time the stochastic cycles down. So this is absolutely a perfect sequence. Again, we have positive divergence, cross, MACD histogram goes up, comes back down and kisses. At the same time, we get a cross here. And so there is an entry within the pattern, and then I think the resistance level here, I'd have to go back and look at the other chart. I think the resistance level was at 62. Okay, so there was an opportunity to get in early, and then you could add when the stock eventually breaks out. So nice sequence, slow moving utility, but you know what? It works. After a couple days, you're up a couple points. It adds up after time. All right, I don't always restrict myself to only trading stocks where I get a positive divergence. Here's Twitter. Okay, just a simple day trade. Didn't get a positive divergence, but what I did is I got a cross here. And one thing I'll notice here is like the orange line here is a 21. So it was resistance there, it was resistance there, it was resistance there. But you'll notice that there's a big drop off the 21, a big drop off the 21. But here we had a very shallow drop off the 21. Okay, so when we got the cross here, the MAC moved up, came down, kissed, and then started going back up, and we had a shallower dip here. That told me that the tide was probably turning. So this kiss here and this cross here was, you know, good for like 30 cents, which is fine. I mean, 30 cents here, 30 cents there. It adds up over time, and it keeps me in the market. Okay, some people say like only trade the really good ones, and I agree with that. You should trade only the good ones, but if you literally like only trade the best setups, you'll end up sitting and doing nothing for days or sometimes a week or two at a time. And then when you actually get the really good setup, you won't be in the right frame of mind to take it. So a day trade here, a day trade there, 30 cents, $1, 50 cents, whatever, they add up profit-wise, but they also keep me in the market and keep me like kind of in trading mode as opposed to standing there with the bat on my shoulders. All right, so here's another one, Advanced Micro Devices, AMD. I've played this many times over the last few years. So what happens is the stock trended up, and then we were moving. This is a 60-minute chart. Then the stock tried to move sideways in a range. I was just looking to buy a dip within the range. Okay, so let me erase that line. So we don't have a perfect divergence here, but it's close. It's close. So we got kind of a divergence. Then we got a cross here. This one did not give us a hump and then a kiss and then a hump. Instead momentum just started slowly building. You can see the distance between the MACD and the signal line is increasing. Obviously that corresponds to the histogram trending up. So this was one that was a little bit harder because we didn't get the noticeable dip, but it was still there. Okay, the stock popped off a bottom, moved sideways. We had a resistance level here. So there were entries. If you back this chart up, the chart's doing really well. It trends up, moves sideways, and I love to play a dip within a sideways trend from a strong stock. This met all the criteria. So for me, this was just a nice trade up for a point or so. All right, one more. Here is SQQQ. It's the triple Q's short stock, bearish stock, I guess. Really nice setup here. You got positive divergence, you got a cross, and then while it's crossing, the stock dips one more time. I love it when it dips one more time and the MACD stays positive. And then the MACD, you get a little bit of a dip here, and you get a cross there. Okay, so again, you got a positive divergence, stock goes up, comes back down, dips one more time. While it dips one more time, the MACD histogram stays in positive territory. At the same time, the stochastic cycles down. You get a signal, and then obviously it's done really well. Okay, now it's been doing like this since then, but that was a nice move out the bottom. Okay, that's all I have. Okay, simple setup, 2 indicators, works on multiple time frames. Sometimes it's good for bigger moves. Sometimes I'm just looking for day trades. Just to stay active. But anyways, it's a simple setup that you could probably duplicate. Go back test it, look at a bunch of trades you've done, see if this would work for you. All right, thanks for listening, and I'll see you next time.